Welcome, everyone. We're here tonight talking about some new information from Warren Buffett and a few other things that we need to kind of hear what's going on. So I'll hand it over to my good friend Ron here and let him share this interesting information.
Yeah, thanks, Jeff. Well, I'll tell you, it's getting more and more entertaining by the day. It's entertaining / interesting. And again, I want to preface everything I'm saying in terms of what's going on in the financial markets and things like that. And the big reason why we're putting this on is because of my deep concern for what is happening and what I believe is coming. Very, very few people are prepared for the environment that I think lies directly ahead at all. And so, again, I was in the financial markets for many decades. I was a vice president for some of the biggest financial firms on Wall Street, including one of them, a little firm called Lehman Brothers, that notoriously is no longer with us because of the meltdown of 06, 08 and what happened there. But my concern is for something much, much bigger that I think, Jeff, to be honest, a lot of people know something's just not right, in terms of the economy and whether you want to point fingers at different political parties. To be honest, both sides of the aisle have mucked this thing up by kicking the bucket further down the road and not fixing things that needed to be done years and years ago. But here we are. And last week we talked about how Warren Buffett was throwing out a cautionary piece that he was concerned about the market being very overvalued. And Jeff, do you want to pull up that chart so we can take a look at that guy one more time? Okay. So what you're looking at essentially is a chart that Warren Buffett devised, which is it helps him understand when the market is over or undervalued or fairly valued. Okay. And the blue line that you see there that just moves kind of steadily upward is our economy. It's our gross domestic product, how much we as a country produce in goods and services every year. And the red that you see is the Wilshire 5000, or in other words, all the stocks of any size to be measured, what is their overall value. And Buffett's philosophy or belief is that this will that the markets cannot get too far away from where the overall economy is. And you can see how closely that thing is tied to that graph. Okay. And again, I'm not here to give my investment advice. I no longer have my licenses. I'm giving my opinion. Consult with your financial advisor as to what you think is best in your situation. Okay. But I'm just going to share what I see and what I think people should do from my perspective personally. Okay. That first, right in the middle of the chart, you see that interesting first really good pullback. And what that was 1999. And at that time, Warren Buffett came out and said that the market is overvalued. It's this new thing called the internet that has come out has created hundreds and hundreds and hundreds of companies that have no earnings whatsoever, and they've created this frenzy where everybody is piling into it and can't get enough of it because it's the new thing in town. It's going to be the new technology. Almost sounds like AI, just a little bit. Curious that. Well, he came out and said that the market is significantly overvalued, and believes we're going to be seeing that change. Okay, for the next several months, the markets kept going higher, and a lot of let's just say disbelief, calling him as outright wrong, doesn't know what he's talking about, doesn't know anything anymore. And then came the crash of 2000. Okay. And you can see that we not only got down to the blue line, but we crossed all the way back underneath and then started a slow climb out of there. Okay. You see 2006, 2008, the next big decline, where we weren't much, we've never gotten very much above our economy, our GDP. The market just doesn't get very far away from that. It's come underneath quite a bit in crashes and big sell-offs. It's dipped down pretty good. But what I really want to bring your attention to is where we are now. Look at where our economy is, the GDP versus where the financial markets are. And they're actually up higher than this most recent chart. They run a bit higher currently than the end of this chart. But you're substantially overvalued. I mean, it's hard to even begin to appreciate how far overvalued we are in terms of the real estate in the financial markets at this point in time. And as we've seen in prior corrections, bigger sell-offs, crashes, if you will, you don't just go back to where the economy is. It goes through and then down some. Okay. So my talk last time was about possibly the biggest bubble in our times, the biggest financial bubble of the history of the United States. And this is what I'm referring to. Look how exaggerated this thing is away from reality, which is where the everyday person lives, is on that blue line. Okay. But when you've had trillions of dollars thrown into the economy in terms of stimulus checks and forgiveness of debt and forgiveness of student loans, and you've taken interest rates from way back at the beginning of this graph, which was at very, very high levels, and now you've taken them all the way down to almost zero, you have created this massive amount of cash flow that's just created overvaluation, in my opinion, on everything at levels that we've never seen in the history of the world. By any measure, nothing can compare to how overvalued this is to what we call reality, or where our economy actually is running. So my concern is that people are not really aware of how significant this is. And I guess if I had a theme for what we're talking about tonight, it would be, it isn't if, it's when. Okay. It isn't if we're going to see a correction / crash / something perhaps even more painful than that, because my personal feeling is we're not going to see just a down, for a year or two and we're over. This could be a situation that lasts many more years than anything we've seen in our lifetimes. Okay. So, again, this is a warning, if you will, a cautionary note. I hope people aren't extended financially. We saw what happened in 06 and 08. As you can see by the chart that we're looking at, this is just one measure, but it's a measure that one of the wealthiest and arguably the most successful investor of our generation has ever seen. And he's saying that we're going to be correcting by at least 50%. I think he's being very conservative in that number. And but time will tell. So my vision has been to look for a way to be able to generate income on the side that could do very, very well in this kind of economic environment, and is involved with products and services you use no matter what the economy is doing. You have to have them. And you use them up and you use them again. So I've been looking for something to do in those areas that help me get prepared. But I also wanted to wrap up by talking about what the Federal Reserve did today. Okay, today was what we call Fed Day. It's where Jerome Powell and the Federal Reserve governors come out and talk about what they're doing with interest rates. Well, they didn't decide to raise interest rates at this particular time, but they made the decision, or they came out and said, but we may be looking to see interest rates higher for longer, and in other words, into 2024. For people that are in the real estate area that count on mortgages and what we're seeing in that arena, that's not the kind of news that I think is going to be very welcome, to say the least. I could show you a chart here. Jeff and I were looking just a bit ago of what the stock market's reaction was to that news. But Jeff, can you share just a bit about what you're seeing, because of your background in real estate, just talking to people in that industry, what are they seeing?
I've talked to a few different agents around town, and what they've been seeing is anywhere between 50 to 75% off of what they were last year. They're very slow compared to last year. Me personally, I'm about 30, 35 inspections behind my pace I did last year as well. So yeah, we're definitely seeing a major slowdown in the industry. And I know a lot of the leads that, realtors are getting aren't even, really strong leads like they were. They were just people just kind of hoping for a dream of getting a house, but either not ready financially or they just don't have enough money for the price point that's available with the inventory, which is very low.
Yeah, well, we're in Colorado, and I can't count the number of homes I'm getting announced on my phone through Zillow of homes coming on the market here. So it's kind of, and I'm seeing a lot of price drops in this part of the country. So
I started seeing a few of those too. So
yeah, so it's, again, we're not experts in the real estate market at all. It's not our area, but Jeff, certainly your background. And so we are in the very early stages of things getting more and more challenging. Oil has now consistently been hanging above $90 a barrel. Concerns that we could be seeing that heading a fair bit higher. Our reserves of oil at this point in time are the lowest they've been since 1985, because this administration has seen fit to try to get us into electric vehicles with either the carrot or the stick.
I saw something yesterday. We're down to 20 days of reserves in our oil.
Yeah. And I thought that was supposed to be there in case we had international conflicts and things like that. I mean, we don't have to worry about that at all, do we? I mean, China, Russia, and everything, we're just good buddies, and we don't have any, we're not poking the bear or the dragon at this point at all, are we?
No.
What could possibly go wrong here? Yeah. So don't be surprised, guys, if you see some very, very different things than what we're used to in the years ahead. I would really, really strongly suggest that you try to develop additional streams of income. In my opinion, this is not the time to be taking a lot of risk financially. 90-day treasury bills are paying over 5% currently. That's very, very safe money. And that's what I'm doing with my funds at this point. And so when you can get that kind of risk-free rate of return, or as close as you can get to risk-free, I'm assuming the government will always pay their bills to us. But we are living in very interesting / challenging times. I would argue the most challenging times dead ahead of us that I think we've ever faced in this country since the founding. Boy, and I can compare it to some times in our history that have been extremely very difficult, but I really don't like what we're facing at this point. So Get back in
don't
touch with Jeff and I
I-
privately if you'd like to talk some more about what we're looking at, what we're doing, because we believe we've scoured the financial world for some solutions to what we think are going to need to be taken very, very soon. So, Jeff, I appreciate you, buddy, so much for
Yep.
setting this up. We're going to do this again next week, I think, and really just trying to keep this going. So as new information comes in, we can share, and we went up a little bit long this time, maybe, but hopefully this information helps. And Jeff, do you have anything else you want to add to it, buddy?
I just want to continue adding that, anybody has any questions, feel free to, contact Ron or I, and, and we'll, if you'd like us to try to, discuss any topics, let us know as well. So,
Yep.
So,
okay, everybody,
look
stay
forward
safe
to,
out there, and hopefully we'll talk to you soon. Take care.
all right. Thanks, Ron.
You bet.
Bye.
Bye-bye.